We're into December, and before we start thinking of where to put up the Christmas tree, we wanted to bring you your market update. The latest land registry stats are up to the end of August 2022. It's tricky when you're always reporting on the past, but land registry figures available do show how the market returned to normal post-pandemic. Figures sound like they're down significantly, but that's only comparing to the time when the stamp duty incentives were in place. There were 3,816 sales in Worcestershire, which is 38% lower. 1,679 of those sales were in Worcester, 593 in Malvern and 420 in Droitwich. The average sales price of properties remains highest in Malvern at just over 290,000, which is up 8%. In Droitwich, the average is 278,500, which is up 5%, and in Worcester, where 44% of the sales took place, the average sales price increased by 6% over the last 12 months to 242,000. If you look at the 5-year picture, then Worcester is up 23%, Droitwich up 18%, and Malvern's up 26%. It's worth remembering if you're thinking of buying at the moment and plan to live in the property for some time, because most of us will want growth over a period of time, although you might not expect it in the first year. Lettings figures are still fluctuating in Worcestershire with 7% increase on average. In Droitwich, the average rent is £719. In Worcester, it's £783, and we're looking at £870 per calendar month in Malvern. Nationally, at 3.8%, UK rental price growth is still on an upward trajectory. The ONS index is based both on tenancy renewals and also new tenancies, which is why it sounds a lot lower than the Worcestershire average. Rising interest rates have stopped some of those wishing to come out of rented to owning their own property. Unfortunately, demand continues to outstrip supply in the rental market, and we can't see this getting any easier. The JLL predict rental values will grow by 15.9% in the next 5 years up to 2027, with higher growth in 23 and 24, but then less in 25 to 27 as inflation is brought under control. On the 17th of November, the Chancellor pledged to face the economic storm as he announced widespread spending cuts and tax rises. In the short term, gross domestic product, or GDP, is likely to shrink by 1.4% in 2023, but then it's expected to grow by 9% towards the end of 2027. 2 weeks earlier, the Monetary Policy Committee voted to raise the interest rates by 0.75%, and that's taken the base rate to 3%. Whilst the headlines of report is the biggest rate rise in 33 years, it won't mention that the average interest rate over that period of time was in excess of 8%, and we've also just come out of a period of exceptionally low rates. 0.75% was actually lower than the predicted 1%. It appears that the change of Chancellor and Prime Minister has restored some confidence. There have been lots of lenders also reducing their own interest rates, even since the Bank of England base rate increased, which shows that they are more confident too. Some of these fixed rates now even start with a 4. We're seeing, however, that annual property price growth is softening. We expect that price readjustments will become the norm over the course of 2023. Our advice to everyone out there is to be accurate with your pricing. Ambitious figures won't get high viewing numbers. If you create a lot of interest in your home from the outset, then you'll get the best offers. In the last 2 years, since the reopening of the market in June 2020, average prices have seen a massive rise, 23% according to ONS. Close to 104 property sales took place in September, which is on par with August according to HMRC. Zoopla are predicting that 1.3 million transactions will take place this year, but then sales volumes will drop back to 1 million next year, which is actually in tune with the pre-pandemic market. Figures reported for October are showing it's taking 40 days on average to sell a property. This is 4 days more than this time last year. Although it is increasing, it's still quicker than the pre-pandemic average, which was 63 days. The backlog with solicitors appears to be clearing also, so we're finding that conveyancing period is actually reducing at long last. The UK economy is expected to shrink by 1.4% in 2023, but then grow between 24 through to 27. According to OBR, inflation is expected to peak at the end of 2022 before falling back over 2023. At 5.7%, wage growth in the year to September was at its strongest since 2000, if you exclude the post-pandemic furlough section. However, it lags behind inflation, which has reached a 41-year high of 11.1% in October, according to ONS. Bank of England base rate, as we've discussed, is now at 3% after an increase of 0.75% in November. All of these factors, plus Christmas coming up, is probably getting you to kind of think about what you really want to do next year. It's a great time to have a valuation on your property. Even if you're not committing to listing your home before Christmas, and there's many reasons you should, then at least it gives you a good idea before you start the new year on what your property is going to be worth and what that means you'll be able to afford for the next home. Staff would love to help out in any which way we can, so please get in touch with the team if we can assist in any way.